When we think about big money crimes, maybe you picture, I don't know, dramatic bank heists.
Yeah, something flashy.
Exactly.
Yeah.
But there's this quieter crime happening all the time, tax fraud. It costs governments and honest businesses billions, a sort of hidden drain.
Mm.
Welcome to the deep dive. We dig into the details so you get the clear picture. Today, we're cracking open a report from FinCrime Intelligence.
Yeah, this report is really thorough.
Our mission, to really understand tax fraud based on what they found.
Right. This FinCrime Intelligence source, it covers a lot. Goes from the basic definition, what is it, all the way through to how it happens, the consequences.
Tech they use to fight it.
Exactly. Detection, international rules, prevention, even like what's coming next, emerging trends.
So the idea is you'll come away with a really solid grasp of tax fraud, what it involves, how it works, and crucially, why it's such a big deal.
Let's do it.
Okay, first things first. What are we actually talking about? What is tax fraud, according to the report?
So fundamentally, FinCrime Intelligence defines it as intentionally giving false or misleading information on your taxes.
Intentionally.
Yes, that's the key word. Or deliberately doing things to avoid paying taxes you legally owe. It's not just making a mistake.
Right. An honest error on your return, that's one thing.
Yeah.
But actively trying to, pull the wool over the eyes of HMRC or the IRS, that's fraud.
Precisely. And the report makes it clear these authorities, they investigate this stuff. They prosecute.
Okay. And it's not just one kind of fraud, is it? The report mentioned different types.
No, it comes in various forms. FinCrime Intelligence breaks it down. Probably the one people think of most is income tax evasion.
Just not reporting everything you earn.
Basically, yeah. Deliberately underreporting income. Then you've got corporate tax fraud.
That sounds more complex, things happening inside companies.
Exactly. It could be manipulating profits, claiming fake deductions, stuff like that, often on a much bigger scale.
Mm-hmm.
There's also VAT or GST fraud. That relates to the sales tax on goods and services.
Like a shop charging the tax but keeping it.
That kind of thing, yeah. Collecting it from you, the customer, but then it never reaches the government. A real breach of trust.
Okay. What else? Payroll tax fraud was mentioned.
Right. That's where employers kind of mess with the taxes related to their employees' wages, not paying what they should.
Got it.
And another big one, using shell companies.
Ah, the sort of shadowy entities.
Yeah. Setting up a company that doesn't really do much business, but it exists on paper, maybe to hold assets or channel income.
Makes it harder to see who really owns the money, right?
Exactly that.
Yeah.
Creates layers, obscures the trail, like a financial ghost, as you said earlier.
And I guess each of these types presents its own challenges for investigators.
Definitely. Different methods, different legal angles.
Mm-hmm.
So how do people actually do it? What are the common techniques the report highlights?
Yeah, what are the tricks of the trade, so to speak?
Well, FinCrime Intelligence lists quite a few common methods. A big one is just falsifying financial records.
Cooking the books.
Pretty much. Manipulating accounts to hide income or invent expenses. Using fake invoices is another.
So creating paperwork for things that never happen.
Exactly. Bills for services not rendered or goods not supplied. Underreporting cash income is also, well, persistent.
Especially for businesses that handle a lot of cash, I imagine.
Right. It's tempting, though illegal, to just not declare some of it. Then there's inflating expenses.
Claiming more costs than you actually had. Or just making them up.
Both. Exaggerating legitimate costs or claiming entirely fictitious ones.
The report also mentioned transfer pricing manipulation. That sounds like a bigger multinational company thing.
It often is, yes. It's about moving profits between different parts of the same company in different countries.
To find the lowest tax rate.
Essentially, yeah. Shifting profits to low-tax jurisdictions to minimize the overall tax bill. Now, some transfer pricing is legitimate tax planning, but when it's purely designed to evade tax, it crosses the line into fraud.
Okay. And tax havens, the classic offshore account idea.
Still very much a method, using jurisdictions with very low or zero taxes to hide income or assets.
Right. And we already touched on those complex ownership structures.
Yeah, using layers of companies, trusts, nominees, making it incredibly difficult to figure out who the ultimate beneficial owner is. It's like a deliberate maze.
Wow. So lots of different ways to try and cheat the system. What are the consequences when this happens? Why should, the average person care?
The impact is huge, and FinCrime Intelligence really stresses this. The most obvious one is lost government revenue.
Money for schools, hospitals, roads.
Precisely. Money for essential public services. When that revenue isn't collected because of fraud, Everyone else either picks up the slack through higher taxes or services suffer, or both.
That really puts it in perspective. It's definitely not a victimless crime.
Not at all. And it also distorts the market.
How so?
Well, think about it. Honest businesses pay their taxes, follow the rules. They're competing against companies that are effectively lowering their costs by cheating on their taxes.
Right. It creates an unfair playing field.
Absolutely. And for those who get caught, the penalties can be really severe. We're talking heavy fines, asset seizure,
Jail time.
and imprisonment, yes. The report makes it clear regulatory bodies like HMRC, the IRS, they are focusing more and more on catching and prosecuting this.
So the stakes are high for the fraudsters, too. Okay, let's shift gears a bit. We live in a digital age. How is technology changing the game in terms of fighting tax fraud?
This is a fascinating area. Tech is becoming a really powerful weapon for tax authorities. FinCrime intelligence highlights things like advanced analytics.
Using computers to crunch massive amounts of data.
Exactly.
Yeah.
Sifting through financial data to spot anomalies, unusual patterns, things that might indicate fraud, red flags that a human might miss.
So sophisticated data mining.
Right. And AI, artificial intelligence, is playing a bigger role too. AI-powered tools can help detect suspicious behaviors, trace complex money flows, maybe identify hidden income streams.
Wow. What else?
Data matching is another key tool.
Comparing information from different places.
Yes. Authorities cross-reference data from banks, employers, investment firms, property records, you name it. If the income you declare doesn't match, say, your bank deposits.
That raises questions.
Big questions. Pattern recognition software is also used to spot trends that often signal fraud, even if individual transactions look okay on their own.
Interesting.
And finally, there's a move towards real-time reporting in some areas. This allows authorities to detect and react to potential fraud much faster, sometimes as it's happening.
It sounds like a constant technological battle then. Fraudsters finding new ways, authorities developing new tools.
It really is an ongoing race, and because money moves globally so easily now, international cooperation is vital, isn't it?
Absolutely. What does the report say about global efforts?
FinCrime intelligence emphasizes how crucial this is. There are major initiatives like the OECD's Common Reporting Standard, the CRS.
What does that do?
Basically, it gets participating countries to automatically exchange financial account information. So if you have an account in country B, your home tax authority in country A will likely find out about it.
Makes it much harder to hide money offshore secret.
That's the whole point. It reduces that banking secrecy. Then there's the Financial Action Task Force, FATF.
They set standards, right?
Yeah, they promote international standards to combat money laundering and terrorist financing, and that includes tackling the proceeds of tax evasion. They push for transparency and cooperation.
So it's about closing loopholes that work across borders.
Exactly, trying to create a more unified global front against tax evasion.
Okay, so authorities are fighting back with tech and global rules. What about businesses themselves? What can they do to prevent fraud, either internally or becoming victims, and just generally stay compliant?
The report offers some clear advice here. A big one is strengthening internal controls.
Like checks and balances within the company's finances?
Yes. Robust processes to prevent or detect fraud early. Regular independent audits are also key. They help ensure financial records are accurate and that the company is following tax rules.
So ongoing vigilance, not just a year-end scramble.
Absolutely. And of course, ensuring you actually are complying with all the relevant tax laws. That sounds obvious, but regulations change.
True.
Training employees is important too. Making sure they understand ethical conduct, the seriousness of fraud, and the importance of accurate reporting. Fostering a compliance culture.
Right. Getting everyone on board.
And maintaining really clear, transparent, auditable financial records is crucial. Plus, using tax compliance software can really help. It automates things, reduces errors, and improves accuracy.
Makes sense. Good governance, staying informed, and using the right tools. So looking ahead, what are the new challenges? What emerging trends in tax fraud is FinCrime intelligence seeing?
Well, the digital world keeps throwing up new challenges. Cryptocurrencies are a big one mentioned in the report.
Because they can be anonymous and hard to track.
Exactly. Their decentralized nature makes tracing transactions and linking them to individuals for tax purposes quite complex sometimes. Authorities are still grappling with how best to handle crypto taxes.
I can imagine. What else?
The rise of the digital nomad. People working remotely, often moving between countries.
Figuring out where they actually owe tax.
Precisely. Determining tax residency and obligations can get really complicated. And then there are peer-to-peer platforms.
like Airbnb or Uber or freelance sites.
Yeah, platforms where individuals earn income directly from others. Ensuring all that income gets reported correctly is another area needing attention.
So the ways we earn money are changing, and the fraud methods adapt alongside them.
It seems so. But, as FinCrime Intelligence notes, tax authorities aren't standing still. They're issuing new guidance, trying to clarify rules for crypto or the gig economy, and boosting their monitoring capabilities for these newer areas.
It's certainly been quite the deep dive into a complex world. Tax fraud is clearly much more than just fudging a few numbers. It's varied, it's damaging.
Absolutely. We've seen the different forms it takes, from simple evasion to really elaborate corporate schemes using shell companies and transfer pricing.
Yeah, and the impact lost public funds, unfair competition.
Definitely. But also the increasing sophistication of detection methods using technology and analytics.
Right, and the global push for cooperation through things like the CRS and FATF.
And even as authorities get better, new challenges like crypto and digital nomad income keep emerging. It's a constantly evolving landscape.
It really is. So here's something to maybe think about as we wrap up. Given how sophisticated tax fraud is becoming and how our digital world keeps changing, what role do you think individuals and businesses need to play? How could we all contribute more effectively to ensuring tax compliance and supporting a fair financial system for everyone?
That's a really important question. Food for thought.